I know just saying a 50-year mortgage probably triggers some emotional response in all of us, but you have to kind of put that in check and really look at it through a few different lenses. And that's what we're going to talk about today. Is a 50-year mortgage a good thing, a bad thing? Maybe a mix of both. We'll see. Paul, what's your read on the 50-year mortgage? The thought of floating a 50-year mortgage has been put out in the market, and it may come to fruition. What's your initial thoughts?
So, well, I mean, really, they're all tools. There's thousands of different loan programs out there. This is just another one that does some good for some people. I mean, most people are in and out of their house by, there's some stats say 7 years, some say up to 13 years. That's the normal turnover for people in their homes. So nobody ever really, pays off a 30-year loan. Pays off, so 50 years is just to get them through those 13 years. And it's amortized, the same way as a 30 years. So the monthly payment's a little bit lower. Everybody's talking about the back end, but it's like if the average is 13 years, even if it's 20 years, who cares about the back? You're not paying the extra $1 billion that they're talking about. And also, people are saying 50 years is way too long. I've sold houses to 80-year-olds that got 30-year mortgages. So
right.
That whole argument, I'll be dead by the time that's done. They'll still give it to you.
Right.
Well,
it's a tool.
It's a tool.
Not your, I didn't call
not
you
me.
a tool.
You're not talking to me.
Not this time. Not this time. But it's just another tool that lenders have to help people get into a home.
Well, let's look at a real world example here, just for our audience to hear. Let's say you're going to purchase a home at $300,000 and you're going to put 20% down. So that's $60,000. So your loan amount would be $240,000. So in the current market right now, if you have a longer amortization, usually the interest rate goes up a bit. If you have a shorter, like a 15-year amortization, you typically get a better deal, a little bit lower interest rate. So in this example, a 50-year mortgage may be at 6.5%. A 30-year mortgage could be at 6%, and a 15-year mortgage could be at 5.5%. So what does that look like with a monthly payment? 50-year mortgage, you're looking at a total monthly payment of $1,275.
Principal and interest, right?
Principal and interest, not including taxes and insurance. Thank you for the clarification.
And we also have to disclose that this is not based on any facts. This is not for anyone. We are not lenders.
We are not lenders. And
it's not valid in California or Massachusetts.
Just comparing numbers.
That's just comparing numbers. A 30-year mortgage. So a 50-year mortgage, you're at $1,275 a month. A 30-year mortgage, which is what we're used to, is $1,439 a month. So you have a difference of about $175 or so. And then you have a 15-year note, which is at $1,938. So the difference between a 15-year and a 50-year is the difference of probably $325 a month in this scenario. Now, what really gets interesting is the interest paid. The total interest paid on a 50-year mortgage, assuming you carried it the full 50 years, would be $765,000 you would pay on that $240,000 note. And then on a 30-year note, if you carried it full term, it would be $518,000. And of course, on a 15-year, it's going to be significantly less, closer to $350,000. So the interest argument, and this is where a lot of people say, well, if you do a 50-year mortgage, what all you're doing is enslaving people to an interest payment for the rest of their lives. That's the big argument against a 50-year mortgage.
Go over the 30-year again. You're spending double on a 30-year, right?
Correct.
Mm-hmm. Yeah, I mean, we already have that.
Yeah. Yep. Now their argument is, and I'm not saying I agree, I'm just saying the argument is, now it's worse. Now you're indentured to this debt for the rest of your years. And in fact, your very first payment, because the amortization is so long, your very first payment is negative. It's a negative amortization. In other words, you haven't even paid a penny toward principal. You are paying 100% interest, and you're actually negative. You have another $25 in this instance.
When do you get to principal? How long does it take?
That's a good question. I would say at least a year, maybe a year and a half.
There are programs out there right now that are so interest heavy or front loaded interest that it does take forever, or feels like forever, to get that principal reduction. So definitely, if the paid interest is of the most importance to you, look at the amortization schedule before you sign your loan.
Yeah. Great point. Shannon, I'm jumping over to you. What are your thoughts on a 50-year mortgage? Paul let us know it's a tool. He didn't call me a tool. He just said it's a tool. What are your
I won't
thoughts?
call you a tool.
Oh, thank you. That's two. I'm 2 for 2, people.
Today.
Happy Thanksgiving, by the way. I hope we all had a great Thanksgiving. Yesterday was Thanksgiving, and we have a lot to be thankful for. And if you didn't watch our Thanksgiving episode, you should go back and watch it, because Shannon has an incredible recipe for the leftovers, which you should be eating today. So go.
You're gonna need it.
Yeah, go to last week's episode. Check out the comment section. We put in that recipe. I digress. But Shannon, back to you. 50-year mortgage.
Well, I agree. It is just a tool. I think that when people really get down in the weeds and get upset about this stuff, they're not looking at the biggest picture. It's like saying that a real estate contract isn't a good decision because you might pay higher interest rate, or you might have a balloon payment in 3 years that you can't afford. Nobody expects to pay the balloon payment in 3 years. They expect to refinance it before then, or figure out another option, sell the property that they're waiting on to sell, or whatever that is. I think that when people get really upset about these, is it right for everybody? No. Do I want one? No. But we grow, the biggest wealth that Americans have is in real estate, is in their home. And the idea is to get almost everybody buying into that wealth, everybody growing that wealth, everybody doing that. Now, if it doesn't make sense for the average person, because they say, look, I've been paying, the $1,200 a month rent now for the last 5 years, and I can do that, but this house that I need, this price point that I need to be at or can afford, this equal house for this rental is going to be that 14 or 15, I can't do that. Well, does it make sense? Sure, it makes sense, because what's going to happen over the next couple of years? Your needs are going to change. Your income's going to change. Your situation's going to change. That's right. You're going to start getting equity in that home. Even if you don't pay down a penny of your equity for a couple of years, if the market grows, you're still gaining some traction there. You're still gaining something. So by the time that you decide that this home no longer works for you and you sell it, now you're working with a nest egg to go to your next one. Buy more favorable terms on your mortgage, or get another 50-year mortgage. The idea that somebody is going to actually pay 50 years of the exact same payment on a house is almost absurd. I tried to look online. I tried to Google that, like how many actual 30-year mortgages get paid 360 payments. And it can't tell you, but it always says it's very unlikely. It's very low. There's no data on that. Because
data on that. Because shocking.
Who does that? Nobody does that. Even if you say, I'm keeping this house for 30 years, this is my forever house, I'm going to retire in here, I'm going to fully pay it off, then you might want to get better terms, or get the best terms you can at the time. And then when terms are better, because during 30 years, it's always going to be better at some point, then you go out and you refinance, or you do something at a different rate. You figure out what works for you there. Switch over, you have a higher income, switch over to a 15-year mortgage, or just double your payments. If you can do the 15, do that, because you're going to get a lower interest rate. You're going to pay it off faster too.
I love the meme where they show Dave Ramsey on his deathbed, and they're like, he just learned of a 50-year mortgage.
Right. Yeah.
Well, but I think too, like, if you think about minimum wage, people are thinking like, this 50-year mortgage, like, you can't do that. Well, you can't live on a minimum wage either. These are entry-level mortgages. They're tools that, if you're in a bad situation, or this is the only thing that you can do, this is a good way to get into it, and you have options to get out.
Think of it that way. You're not buying it for 50 years. You're using this 50-year mortgage to get in the game, to get going.